Hi dear traders, last week the US dollar was rapidly losing ground after the fresh inflation data showed that consumer prices in the United States slowed down. This means that the US regulator may abandon its plan to raise interest rates 2 more times this year. Let's see how this prospect has affected the markets. The US dollar index, which demonstrates its value against the basket of 6 major currencies, closed this week with serious losses, having dropped to a 15-month low. This is how investors reacted to the possible end of the Fed's tightening cycle after the July meeting. The stock market cheered the news that borrowing costs will no longer rise. Consumers are also optimistic. According to the preliminary data from the University of Michigan released on Friday, the U.S. Consumer Sentiment Index reached its highest reading in 2 years. This news helped slow down the decline of the U.S. dollar at the close of the trading session. So, at the end of the previous week, the greenback retreated by 2.37% against the European currency. The euro is in turn reached its highest level since February 2022 and settled above 1.12. Investors are sure that the European Central Bank will continue to fight inflation, and rates in the euro area and the US will soon be at the same level. Meanwhile, interest rates in the UK may become even higher than in the US. This week, traders are looking forward to the inflation data in the United Kingdom. Estimates show that inflation is still running high, just above 8.2%, meaning that monetary authorities will have to raise rates further. The British pound closed last week at 1.3 against the US dollar for the first time since April 2022. As for the Japanese yen, it was finally able to win back early losses against the US dollar. In addition to a weaker US dollar, the prospect of currency interventions from the Bank of Japan also contributed to the yen's recovery. So far, Japanese policymakers have been making only verbal warnings. Thus, Japan's Finance Minister Shunichi Suzuki warned against excessive selling of the yen. Traders took this as a signal that the Bank of Japan is ready to intervene in the foreign exchange market. Gold traders have been especially cautious recently. The precious metal gained 1.48% to stay just above the key level of $1,950 per troy ounce. The price of gold rose on expectations that the Fed may soon end its tightening cycle. Gold is rather sensitive to the news about interest rates. If the cost of borrowing gets higher, investors prefer to shift their money to government bonds as the yield grows together with the expectations of a higher interest rate. Oil traders also stay cautious, although Brent crude managed to hit the level of $81 per barrel on Thursday. Oil may rise on expectations that the Fed will make just one more rate increase this year. If so, the US economy will recover at a faster pace, requiring more energy resources. On the supply side, all the factors are in favor of higher oil prices. Libya's second biggest oil field is shutting down due to protests, while crude supply from Russia is gradually declining. Also, OPEC maintained its positive outlook for the global energy demand. These are the trends of the last trading week. Do not miss our daily news reports to be always in touch with the latest events. See you!